Hey guys, Mike here. So got another load of video for you with tons of information here, and we're going to talk about one sector, that probably I would say big money is looking at as undervalued compared to another sector that's overvalued. And I've showed you these in the past. And what usually happens is there's a rotation that goes on in here, and there could be undervalued stocks in there to look at. So I'm going to give you that right there. One index that just can't get out of its own way. We're going to talk about that one. And then one of the big mega caps, this stock has done something it's never done before, okay? Not even close. So something's got to give, all right? And so we're going to talk about that. But I did want to show you, talking about China and how they have to start doing QE, right? They have to do more. This surprised me. This really surprised me. And it's this great video. One of these guys does this. I sped it up. It's literally 10 seconds long for you. But I want you to look at this. This is what we import from China and what we export. Top line is what we import. At one point in time, it was 7-to-1 ratio. Then it went to 6, then to 5, 4, and then look at where we're at after COVID now. Sitting at 3-to-1. And it just shows the damage that COVID did to them. Because look at the line we're on, the trajectory, I should say, and look at their trajectory. So something has to give for China. And that's what I keep talking about when I'm talking about the growth for China, because remember, it's the second largest economy, okay? And so, unless they do something major, I just can't imagine, because, they got a demographic, situation over there as is. The real estate market's a hot mess. And so I'm just, curious to see, what they're doing. I know I even read a stat about the unemployment of their young folks, and it's massive. If we had that over here, people would be freaking out. But over there, I guess nobody's saying anything. So, it's just amazing. Put in the comments if you get any more information on that. But here, boy, I tell you what, we do spend like drunken sailors, don't we? It's amazing to see it. But this is the travel, right? This is the TSA checkpoint travel numbers. And you just look at this right here, where we're at right now. We haven't seen these numbers since before 2020, that's for sure. So we've eclipsed 2018, 2019, I read lately. And you can see, nothing but an upward trajectory in 2023 this year. We've actually increased it since we reopened. You can see it's just a straight shot trajectory. And this is another one of those things where we got a supply demand issue, because we actually don't have enough pilots for all the planes. And so you might notice the wait's a little bit longer, even though we tried to work that out with all these different contracts, giving the pilots raises, which of course they pass it on to us, so it makes it even more expensive. So not only are we traveling at crazy rates, we're paying crazy prices for the rates. And this right here, I love this chart because this shows the problem we have when it comes to core PCE, right? Which is demand driven, which is supply driven, right? And man, look at the demand. Holy moly. And so you can see, because the supply chains have freed up. Now, when it comes to housing, that's a totally different ballgame. Supply, we still have a record number shortage and everything else. And so people are having to move into apartments and rent houses and stuff like that. And we're not selling our houses. But when it comes to us buying Nikes and expensive stuff and going on trips and paying whatever prices these stores charge us, that's the problem, is demand. That's what they're trying to slow down, but they're having really not that much success, to be honest with you. And that leads me into this sector right here. And one thing that's getting a lot of talk is industrials, right? And the reason why is because when you compare the PE of the industrial sector to the S&P 500 index, you can see when we hit these kind of extremes, right? We hit these levels, what do you see normally happening? All right, in 2008, 2009, that was a crash. But normally you start to see this bounce up, right? And so that means money's rotating over. What happened when the Russell hit the extremes, right, compared to the SPY? Money started flowing into it, right? And so when you look at some of the companies, there's a lot of companies out there. And I would look for ones with great charts that are in like a stage 1 trying to go into stage 2 versus these ones that have already doubled. And these are the big boys, right? These are the ones you've heard of, the cats. Stay away from 3M, I think, honestly, because I heard they got a major lawsuit on their hands. But, you look at UPS, FedEx had a horrible earnings. General Electric, Lockheed Martin, all these different government contracts. John Deere, I still don't know how that one's doing that good if China's slowing down. But it is, right? Eaton Corporation. So these are the big ones. I would strongly suggest you look into more, which I'll do for the members, of finding charts where they're in stage 1, maybe start at stage 2, and have low PE ratios and hadn't doubled or anything, for sure. But just something to think of. And you don't have to jump in. Just wait. Just wait to see if you start to see that change. And that's going to let you know, oh, wow, big money is jumping in, which means I'll keep you up to date. But just keep it on your radar at least. And if you have some good stocks, please share them in the comments. Now, like I said yesterday, whenever the sentiment changes, we flow in. And so what happens? Massive amounts of money flow in, right? So June saw the biggest equity ETF inflow this year at nearly $30 billion. Oh, yes, we were buying it up. And I showed you last week what we did in 1 week, just the last week, right? And so just billions coming off the sidelines, flowing in and everything. And so it should be no surprise. Again, this is, exit liquidity on the short term for short-term pullback and things like that. And I don't think it's that big deal right now until you start breaking major moving averages and stuff, but it's just normal and actually good for the market if it does it. And so, and before we continue, you can do me a big favor, right down there, just right below the screen, just hit the thumbs up button for me. I appreciate it, okay? And if you're new here, think about subscribing, okay? And, again, thank you for all your support, guys. I really do appreciate it. Now, the IWM, this is the index that can't get out of its own way. This is the one when it got to the extremes compared to the S&P, people started piling in, right? And again, I told you, it don't matter, don't mean nothing until you get to 189. And you can see that MACD wants to roll over, but more importantly, that moving average is the 200 moving average. Nothing happens good below the 200 unless you were shorting, okay? Just FYI on that. You can see it going back. When this thing drops down, you usually get a retest or fall if that's what's going to continue. But the greatest thing is nothing good happens below the 200. Okay, and this right here has just been getting hammered. And like I've said, is this the best economic environment for small caps? Absolutely not. It's the worst for small caps. But what's been going on recently is a bunch of short squeezes because money flowed in, right? We talked about that. And when the short squeezes stop, I said, you will see where this thing stands. And they stopped. And this thing is still selling off. So if it breaks that 200, watch out. But you could also get a great bounce off the 200, okay? But again, it has to get above 189. I showed you guys that multiple times. Now, Amazon obviously had that AI pump. 100 crosses the 200. That's bullish. Watch out for this divergence on the RSI. It's on the daily and the hourly, by the way. And so maybe trying to tell us, hey, it's time to cool off or something. Because this ain't one of those high flyers like you get in NVIDIA or AMD or Tesla, right? But what's been driving it lately, obviously, as soon as you got this AI news, boom, look at the call options. They doubled in 1 day. Look at that spike. If this doesn't show you what moves stocks, right? This is it, okay? Especially these tech stocks. This is what moves them, okay? You get a tuple and call option volume. Yes, it's going to move up because of what the market makers have to do in that situation. Now, this leads me to Meta. Look at this stock right here. Even when everything else is red, it's still marching on to close that gap, right? Still marching on. I got 2.23%. Please put in the comments, what do you think is going to happen when it hits the top of that gap? I want to know. Because obviously the RSI is extremely overbought. We've talked about that for weeks. And it's so overstretched from the 200. It's at 67% right now above its 200. So, yeah, that's pretty stretched out. But here's the kicker. It's done something it's never done before. In 2023 so far, this thing, let's put the 50 up here, has not touched its 50-day moving average at all. So that is 6 months. It has not touched the moving average. And if you go back in this chart, which I did, you will see there is no point in time where it didn't at least touch once or twice in a 6-month period. But in this case, oh yes. I mean, this thing right here, this is just an example. This is the closest it ever came was 2021 when it did that huge up. But look at it. 1, 2, 3, 4 times. Okay, it touched that 50-day moving average. The 50 is important because of that, but it hadn't. So I'm just curious to know when this thing hits the top of that gap, what do you think is going to happen? And if you're a long-term investor, you want this to come back down and tap that 50. That's what you want. And then bounce and continue its march on up. That's what you want to see. Because right now, this is just nothing but big money pushing and pushing and pushing and pushing to get that second gap filled, which I showed you the first one. We followed the first one, right? Now, there is 1, 2 big gaps down below, but still, keep in mind that to me was amazing to see. It's never done that. It IPO'd in 2012, and it's been a high flyer ever since, and it's never pulled this one off before. AMD, we talked about, and that freaking trend line right there is important, right? I told you that, and here's the good news. Fill the third gap. We're going to get rid of that. There's the 50 moving up. Look how close it is to its 50, right? And, the members and I were joking about this. This is the definition of a V-shaped recovery. But you see to the penny, it bounced off that trend line I showed you guys, right? So on these stocks, go on a weekly chart, draw some trend lines that have many touch points. They tend to play out. You can see this goes all the way back to 2018, all right? Many, many times it's bounced off of it or it got rejected. You're looking both ways, okay? And again, it ends up working out, bounces right off of it. There you go. Now, obviously with this one, you can see when we go to the weekly, it looks like the MACD wants to roll over on the weekly. It is coming out of overbought territory, which is good. you know, and the RSI is below 50 now, so we got to see if that can turn back up. If it gets a nice bounce, continues back up, because it's dropped like 19%, right? The AI bubble pop is basically happening in AMD at this point in time, and it was a very constructive chart. I mean, you look at this thing, you just follow the MACD, as one of our members pointed out to us, and it moved up perfectly, beautifully with it, just stair-stepping until it hit that crazy AI pump during that earnings call they gave out from 88 to 130, right? But again, that's almost a 20% pullback. So, you know, if you're looking for the semiconductor and all that good stuff, take a look at this, see if it starts to build back out a base and stuff, and some support and everything, or if it continues and gets bounced off the 50, right? You don't have to be jumping on a grenade or anything here. Just FYI, you know, and the last one here on the stocks is BABA, right? This is what I talked about when I said, you know, wait to see if China does the QE. That's what you want to see. And when you get that bad news, no. And so what you got to look at on this one, because this broke through the 200s, broke through the 50, that trend line that it broke through. Now we get to see if it actually holds support now, right? Because the RSI is below 50. This one moves weirdly, of course. But watch out for that and see if China comes out with some. If it does come out QE, you can guarantee those stocks are going to roar. Just guarantee, because it's happened multiple times now. Earnings, Carnival Cruise Lines. I just want to hear about how much they're raising prices, and are we traveling like drunken sailors still? Then on Wednesday, we'll get Micron, so we'll get one of these semiconductor stocks. BlackBerry is funny. I just put that on there because I didn't even know it was still a company, because I just watched a movie that was made about it, and how they hold 0% of the market. I know what they make now. I don't keep up with them, but the movie's amazing, by the way. I think it's on Netflix or something. I watched it. I know it was Amazon Prime. That's what it was. Yeah, Amazon Prime. And it was really good. I didn't know their story. I didn't know why they imploded like they did, but you know, you can thank the Apple iPhone for that one, and some interesting people running that company. But Paychex, that's going to let us know more about the workforce as well. Nike, you'll get to hear a lot about China. It's one of their largest markets, right? So, and we get to see if they're continually able to raise prices and stuff, because I don't know, people love to pay for that Swish, man. I'm not sure why, but they do. And so let us know why you keep paying for the Swish down in the comments. I'm just curious. And then, you know, as far as stuff going on this week economically, honestly, it's all about Fed Chair Powell speaking again. He speaks on the 28th and the 29th. I can't imagine, there's no way he says anything different. But again, the market likes to be volatile and make moves and hear what it wants to hear. So, you know, you never know. We'll see on that one. Then you get core PCE price index month over month, personal income month over month, and personal spending month over month. You can see they expect both of those to decline, the income and the spending. We'll see if it's right or not, because they're all over the place on this one, right? ISM manufacturing, PM. And so besides Powell speaking, I mean, yeah, we'll see if the market wants to react. Again, it depends on how strong we go into next week. If all of a sudden we resume back up, news will most likely be ignored. Doesn't matter. Powell, there's nothing else this man can say. Do we agree with that? I mean, what else can the man say? Because the first time he spoke, the first day last week, they were like, oh my God, it's bearish. And then the next day he said something and then went, oh, hey, it's bullish. I think he said, I can see a soft landing. And then went, you know, and it's like a dog in heat, right? And just jumping on it. And oh my God, you said it's going to be a soft landing. And maybe there will be. But, you know, that's how the market is right now. And what it is, guys, right now, the market just is trying to take a breath. Right, it's the rubber band's trying to come back some, you know, and all that. Getting closer to the moving average, don't mean it's going to touch them, right, and anything like that. But again, what are we looking at? We're going to pay attention to liquidity around here. I'm going to pay attention to any QE out of China. I'm going to pay attention to see if Meta finally fills that gap and starts selling off some, right, because a lot of these stocks are either all-time highs or sitting at the top of these channels still or near them. So that's what we want to look at. That's it. It's constructive if it is. Just because something sells off 5% don't mean, oh my God, the bear market's back, right? Just keep that in mind. I mean, and especially, you know, if you really want to start adding to your positions, you actually want a normal, healthy pullback, don't you? I mean, am I the only one that sees that? Like, come on, put in the comments, like, what stocks would you love to get on a pullback? And I don't mean a 30% pullback, okay? If the index come down 5, 6%, the stocks will probably come down 10, 12% maybe. You know, it depends on the big ones. If they move down, the index will move down even more. But that's what happens when we're overweighted in like 10 stocks. Okay, so anyway, hope you got something out of it, guys. Always like your feedback. Please hit that like and subscribe button down there right at the bottom. Think about sharing the video and watching it. And I will see you guys tomorrow.